There we go. All righty. I want to welcome everybody. Thank you to our all member, that's Hit and Run Candlesticks, Right Way Options, and BYOB e-learning today. I want to thank Doug and John for coming on. I was able to listen to both of them, just sitting back here listening in, and absolutely fantastic. So thank you. Today's topic is price action, which in my mind is, candlesticks. Candlesticks is price action. They're kind of the same. Oh, hey, before we get started here, I heard Doug mention YouTube several times, and I want to mention that I would urge everybody to check out Doug's pre-market YouTube, and John has, I think, started doing that, and then I do that as well. So I would urge, this is what it looks like. I don't know if that's what you see. This is what I see because I'm the owner of it. I don't know if you see something else, but Doug and myself have been doing this a long time, and there's a lot of content on both YouTube channels, and John is just kind of starting. He's got great content for what he has. But I would urge you to do that, get the pre-market, our outlook on it. I think it can be very, very valuable. There's terrific information on all of them. So check your emails. That's the key, okay? And that's when you get notified that the new video has been posted. Also, if you sign up for that YouTube channel, you'll get notified as soon as it gets put on YouTube up and running. So I would really urge everyone to do that and check your email. All right, let's take a look at this. Price action or candlesticks. And candlesticks to me are probably the greatest thing. I mean, if it wasn't for Steve Bigelow years ago, if it wasn't for Steve Bigelow years ago, I don't know where I would be, really, to tell you the truth. Steve took me under his wing. I mean, he really did. I went down. I had a couple private classes with him when he lived in Houston, and I lived in Alaska. We talked on the phone a lot and about candlesticks, and I mean, we were just pretty close on that. It was very, very helpful, very educational for me to be with Steve there. Doing that. And over the years, I've kind of changed things up a little bit. I take candlesticks a little different than what, I did a few years ago, and not a lot of years ago, I guess. And, but candlesticks are still probably the most number one thing on the chart that I would use, or price action, whichever you want to call it. But I do think candlesticks by themselves are, I don't know if they're that good. Here, let's do it this way. There we go. Candlesticks just by themselves, I mean, they're good. Don't get me wrong. I mean, you can clearly see we've got, a bullish engulf, and, we're showing follow through, and now we have a bearish engulf here. And the question is, are we going to have follow through? That's all, and just that by itself, I mean, it's okay, but when you add things to it, like a pattern maybe, or moving averages, trend lines, support, resistance, when you add that to the chart, you get so much more out of the candlestick. You get so much more information, so much more fuel to help you make those trading decisions. And sometimes you don't make you get the kind of information that says don't make a trading decision. Let me give you an example right now. Here's the SPY. I am choosing to not make a trading decision today because in my mind we are still trending, and I'm a big T line user, and that's the black line right here. We're not even below that. And, I think about the market, and I start counting, 1 day, 2 days, 3 days, 4 days, 5 days, 6 days. Where in the world do you think the market's going to go? Where's the easiest place? Well, this is the easiest place. I mean, the harder move would have been to continue going up. We all know, I mean, every one of us should know that we were due a pullback. And I'm not at all bearish yet on this because we are still within that trend or that chart pattern. See, I'm putting something with the candlestick. Now, believe me, I'm not saying that we can't just fall down tomorrow. We could fall down today too, yet even further. But I'm not saying we're not going to do that, but I can't predict that's going to happen. Now, one thing about candlestick traders, if you are a candlestick trader, you will never, ever, ever, ever pick a top, and you will never, ever, ever pick a bottom. But if you put something in there that's not candlesticks, if you have another tool you use to kind of circumvent the whole candlestick thing, well, you just might be a bottom picker and a top picker. But using candlesticks, you'll never, ever be a bottom picker and top picker. And that's because you're waiting for that candlestick to produce right here. And then what you're looking for is that follow through. So here's this candlestick producing. We're waiting for the follow through. All right. Are we going to get it or are we not? And we can't guarantee that we are or aren't. Now, I will say this, just about every single time, no, let me rephrase that, 100% of the time, if we close like this, members in the Hit and Run Candlestick room would more than likely hear me say, I will bet on a lower low every single time. But what I can't bet on is where we're going to close tomorrow. But if we close like this today, I'd put my money on a lower low. There's going to be those times that you're wrong, but that's going to be 1-2 times out of 10. More than likely, you're going to get your lower low based on the bearish engulf. Okay, but again, it doesn't mean that it's going to close down there. So what I'm looking at is the trend, and my trend is still up. Now, I'm not happy with today's candlestick. No, I'm not. But price is still above the T line. The T line is still above the trend indicator. We've gotten a little bit high, so a little bit of pullback is normal. And I'm okay with that. Now, I've got these are not fib lines, by the way, although I'm kind of fussing with it a little, adding and changing things on here, but they're more quadrant lines than anything. And right here, where you see these three bunched up, they're bunched up on purpose. I've made them that way. And what that does is the center one is the 50% pull. In this case, we're looking at the 50% pullback. And then there's just a little bit above, a little bit below to give me sort of a band in here. So right now, that's what I'm seeing is really we could get down there and I'm still going to be bullish on the SPY. We could stay above the green dots and I'm still going to be bullish on the SPY because the overall trend has not broken. Now, if I don't fuss too much when it comes to intraday, if I was to look at a 15-minute chart, well, you see, we're bearish here. I mean, everything has broken down. But like I said, I don't fuss with the faster time charts like that. If we look at a 60-minute chart, that's even breaking down a little bit. But again, I'm mostly on the daily chart. And like I mentioned earlier, I'm choosing today to make a non-decision because we don't know how this is going to play out. And if I start chasing, then what happens is I usually get myself in trouble because timing is extremely important in trading. And if I go to chase this chart right now and say I get short, what I'm really doing is picking a top. I don't know that this is going to be a top. I have no idea. Okay? Let's look at this NVIDIA for a second. All right. Now I am long NVIDIA. Okay, I am long, and I am very close to my breaking point on it here. Okay, so, but I'm not going to chase that short just yet, because all this is really, maybe let me clean this up a little. There you go. All this is really a pullback right now. Now, again, I don't like that candle right there. I don't like it at all. We can draw a line down here. You can clearly see that we have a high, and so far we're producing a failed high. We could come in here, and if we want to draw lines, right on the candles maybe, you can see that we're still above that candle. Now, I don't draw too many lines, honestly, because I'm just plain lazy, is what it amounts to. So I don't draw too many lines. What I've done is I've created a line right here that works very well for the trend I want to take. What I call my trading trend. Candlesticks, when you add candlesticks with something, they become much more powerful. In a chart pattern, in a trend, on support, at resistance. They just become they tell so much more information, like this right here. Okay, we take NVIDIA, an ugly candle, and I am very close to my breaking point. And what I mean by my breaking point is I'm buying a short and maybe closing that long out. But if I do that, I would kind of be chasing this, and I think that's just a mistake for me to do. I would rather have that little bit of follow through come in there, and we may see, I may still get into some putting a short on toward the end of the day, but right now my trend is still trending, and you can see where price so far, whoops, there we go, just keeps bouncing off that trend right there. So this is why I'm choosing to make this afternoon a non-decision afternoon. And because we just don't have that follow through, we're still holding that pattern right there. So that's giving me a little bit more information about the candlestick here. All right. So I hope that kind of makes a little bit of sense. So pattern, moving average, I don't use a lot of moving averages. The moving averages I use them a lot. And those are my trend lines, is what they are. So I do a lot of candlestick work off of those moving averages. And that's what the 3/8 trap is, A 3/8 trap is something that is just simply price action coming off of moving average and going through a moving average. So, we're bouncing off the T-line, a moving average, and then in this case, we're breaking out. I think, this is my breakout scan, my breaking out of the 3 EMA. So that gives us momentum here. And that's all it is. We're taking price action or candlesticks, putting it between two moving averages. So works out perfect for me because I like that. I like that a lot. Take CENX here. See how my trend, that red line, see how that red line right there, trend automatically comes in because it's the way I have the chart set up. And here we're pulling back. Now this happens to be a type of a trap where we're above the 50 and we got below the 17 right here, and you can see we got a little bit below it, and now we're back above the 17. So it's just a different trap setup, coming off the 50 and using the 17 as the, that's the alert that I want right here. But notice the trend. This is important. So I'm putting the trend in there and then looking for the chart pattern and then following the candlestick or the price action. All right. And I'm open for, by the way, I'm open for any kind of questions as we go, anything at all. You have no sound. Please keep trying here. Please keep trying. I guess everyone else has sound. I should say that. Oh, okay. Thanks, Dex. Appreciate that. Maybe it was everybody. Maybe it's me. I had to look up, make sure my mic was on. Okay. Thanks. Let's take Elf. Let's see what Elf looks like. See, here's Elf. See how we've dropped below the trend indicator because at the 17 EMA. We've dropped below, but we're above the 50. Now we're back above. But notice the trend. That's what I want, that trend. All right. So then we'll put price action with trend in there. So, the trend is one of the most important things, and it's something that you learn along the way. I know Doug was talking about it. You pop up, that first move. Careful not to chase it. Let that trend work, and that's where I use the trend indicator. Is I want those green dots to be supportive or multiple, and not just one or two. And it doesn't mean that I don't take trades if it's just a one or two pop up. I certainly do. But I do believe that the better trades come in when you have a stronger trend. So for me, the trend indicator would tell me that, and it would show me multiple green dots, even up to 2 weeks. 2 weeks worth of green dots. Sure, you're going to give up some money. You can look back and say, "Oh, darn it, I should have bought this back here." And for every chart that you look at that you say that, I'll bet you $50 I can show you 100 that didn't work out. So the only reason we're talking about this chart is because it actually worked out. That's one of the mistakes that traders make. You look at these charts. We do a webinar like this, and we see this chart and we think, well, shoot, I want to catch this down here. Yeah, but you're only looking at that because the chart is actually working. And believe me, those first moves can be fake outs. There can be so many of them that you may make money on one side, some trades, but if you're constantly chasing those first moves, the choppiness and the stop out, or you closing it out, will overcome the money you've made on those better trades. So sometimes it's best just to make the deal with yourself. I'm going to give up trying to catch those early moves and wait till it's trending. And it really can be a better game there. It really can. JP Morgan. I mean, look at JP Morgan. I know this has earnings coming up, but look at that. See that trend that I've got going there, that red line? That's what I want. And then I want the candlesticks to start setting up for me. So take JP Morgan. And again, I know that it has earnings. I'm not interested in buying it. We're going to come over here and use this candlestick because that's an important high right there. And you can see here how we've broken out, and we're testing now a moving average, the T line. You can see our trend is still very clear in there. So that becomes a buying opportunity for me right in there. The risk reward is low risk. And the reason it's low risk, because in my mind, if you're buying a 3/8 trap trade, and I'm going to move this up just a little bit, and then we'll put another one up there. So that's a 3/8 trap trade right there. Bottom line is, if you fail that strategy, you would not want to be in it. So the 3/8 trap is an extremely high reward, low risk trade when it's set up properly. And properly, in my mind, would be, we've that red line moving up. You've got green dots here. You've got a rally and a pullback into the T line right in here. See how we're using price with a moving average, with that line across there, pointing out that top. that's going to give us that supporting area, because we don't want it to go below that area. We want it to stay above. So by adding, by using the candlesticks and then adding a few tools with it, it really, really does make it more powerful. And I think it explains or makes the chart more visual on is it worth it, worth it to make that trade. Also setting those stops on there as well. So let's see, LCID. Let's see what this thing looks like. There's LCID. So you can see here we start moving up. So, where do you catch this trade? Here we broke out. That might be a place to catch the trade. Also right through here. I don't think I would really want the trade through here. I really don't. I would probably, maybe try to catch this or try to catch early in here. And, just adding a few things in there really does make a big difference on whether you want to place this trade, keep that trade, or how you might want to trade that. Intel is one that I'm chasing right now. In my mind, I'm waiting. I'm chasing it, but I'm patiently waiting. And what I'm waiting for is for it to set up. Now, right in here is the 50% retracement. I did that just by drawing these quadrant lines in there. And there it is. I've marked it out. But I'm going to wait for the buyers. Now, that's where I would like it. Earlier, before this candle got so darn ugly in here, that's what I was looking at, or just anywhere in that green box. But now, and when I did all that, the plan was to wait for buyers to step in. Something like that would be nice. And then, putz around over here a little bit for a day or two, because I think it'll take a bit for this to swing around. I don't think it's going to swing around on a snap of a finger. So just waiting patiently for it to set up. Here we've got this nice long consolidation and pop up. We made good money on it on the first move up here. I was holding this down into here, and up we went, closed it out, and now I'm waiting for that re-entry on there. So far it's pulling back just like I wanted, maybe a little harsher than I would really like. Here I'm using the quadrant lines. I'm using price action, candlesticks. I'm using moving averages to help maneuver myself back into this trade. Okay. GLW is another one. I missed this trade all completely. It first gapped up, and what I wanted was a pullback, but it never gave me the pullback. It just kept on going until today. Well, now this is setting up just the way I want it. Well, I would like it to be a little bit lower. But having, by being able to watch the candlestick, I can see what other buyers are doing. That's one of the neat things about candlesticks. If there's only two people in the world trading GLW, then each one of us can see what the other one's thinking. If you buy it or close it, or if you short it, we can see each other, what we're doing. So I can see what other traders are doing. And I got to tell you, they're not dropping this very hard now, are they? That's one thing I'm noticing here. So I'm going to keep my eye on that. I start to see that price action swing around. That might be a buy. Now, the problem that I have is we're too far away from the T-line. And that's something I'm going to have to use. Now, there's certainly, a trade there, maybe. You come in here and you put where you think your stop would be, and you might be willing to take that trade right there. Just keep that stop on there. When we're so far away from moving averages, it becomes a little dicey, because price generally does not like to leave too much space between a moving average. And just go look at this chart back here. you can see that every time we get a little far, and I use the T-line. Now somebody else might use something else. That's just the 8 exponential moving average, by the way. A lot of people use the 10 simple maybe, and the same thing would work out here, okay? You get so far away from whatever moving average you've established, and you will find that it pulls right back to it. And, it goes right back to it. It's up there and right back to it, right there and right back to it. Well, we're pretty far away. So what I would like to see is price just to kind of wiggle around. And as it wiggles around, the T-line will climb as long as price is higher. Then when it starts to do that, that's where I want to look for that better buy. So here using candlesticks, using a moving average, I'm also using these quadrant lines to help decide when I want to buy something or close something, okay? So it's not just candlesticks by themselves. You can certainly trade with them, but I think they're a great deal more powerful when you add something with them. Support, resistance, moving averages. Some people use fib lines. So anything you might use, MACD, if you use MACD, or Bollinger Bands maybe, if you use that, just anything that helps you with making that final decision, I think adds to that, okay? Any questions, anything you might have? See, I'm checking over here. AKAM is a trade we took, and still up on it, and you can see it just stopped right here at one of our target areas. And I don't know if you can see it, it's kind of dark, or light, excuse me, that dotted line, but that's the 500 period moving average, just above that orange line. That orange line is one of our quadrant lines there, and it's moved up there. I'm not too worried about it because we're still holding above that 50 period moving average. So I'm going to sit with this. So just by looking at the chart and thinking about the chart pattern, and here's what we have. We've got a very nice rounded bottom in here that's starting to come up, and we're up, 1, 2, 3, 4 days. So a little bit of a pullback would seem normal, especially in the market, the way the market's going right now. And by the way, speaking of the market, you can see the SPY, we're actually putting in a little bit of a wick down here now. Check out the diamonds. The diamonds are actually holding up quite well. And again, here's our trend, just using a little trend there. Diamonds finished up yesterday, very, very nice. And we're showing a little follow through. One of the things about the SPY, the reason it's down a little bit more, is it's very tech weighted. And the Qs are getting punished today. Tech is getting punished today. If we look at T2123, this is another one of these tools that I use, as I'm making that decision on that candlestick. And we are very bullish here for the first time in a long time. And you're right, Mike. It really is because of IWM. And so we're getting a little bit of shift in the market. This is why I'm a little hesitant to chase this afternoon, is because the market is, one side of the market is getting the snot beat out of it, and the other side of the market is just marching down the street with its head high. So, we're having this a bit of a churning going on right now. Is why I choose not to participate so much in the market. Now that could change toward the end of the day for sure, when I need to make some decisions here. FCX. Now I bought some more of this today, and you can see how. Here, let's see if I can do this. All right, whoops. You know what? Let's do it this way. There we go. So let's start with this chart right here, just the candlesticks. So we can come over here and And, I could draw something like that. There's an inverted head and shoulders. I can come over here and draw that. And here we've broken out. And then, I can come over here and draw this sideways box setup. Very nice setup, by the way. I love it. And then for the negative side of this, I could come in here and say, well, we've got a head and shoulders brewing up here, and it could turn out to be that way. Just because we have, that resistance line doesn't mean that it's actually going to fail. That's not what that means. It means it might have to work to get over it, and it's working. That 1 day, 2 day, 3 day, 4 day, 5 days. It's been working on it for 5 days. So we'll see if it actually works out. So now let's come back over here, and then from this high to this low, we're over that 50% mark. And that's one of the tools that I use an awful lot. We're over that 50% mark. We're also over the 50-period moving average. We're up and we're consolidating. And this was worth the risk for me this morning to buy another position in it. And then I put targets in there, just sky hooks really, but we all like targets, so I put the sky hooks in there. And, just waiting for that to move. And as long as it wants to just keep moving right through here, and I'll just watch the candlesticks. What would tell me something is wrong with this chart? Maybe something like that. Maybe something like this. And we break through that 50%, that's going to tell me that something is wrong with this chart. It might take 10 days to do it. It might take 1 day to do it. I don't know. So really what it is, it's a race between moving up to that first target or down to the 50% mark. And we can't predict what's going to happen. You couldn't have truly predicted that today was going to be a down day in the market. You cannot do that. Because if you predicted that today, you would have had to have predicted that yesterday. You cannot predict. This is why candlestick traders will never, ever be a top picker and a bottom picker. Not ever. Because you can't predict. What you're given is you're shown the picture and then you follow through with the picture. It's kind of like watching a movie for the 12th time. Same movie over and over and over. And after a while, you finish the line that somebody just said. It's coming up. So you've heard it, and now you can finish the line. Well, here you've heard it, but you can only finish the line because this is a whole new movie right now. So you watch that movie once, okay. So now we're going to watch the same movie tomorrow. And you're going to finish the line. So if you're watching the same movie tomorrow, you know what this candle is saying, and if that happens, you know how to finish the line. You know how to you've watched the movie, you know what happens next. Now, here you watch the movie, it could surprise you. A good Alfred Hitchcock movie will surprise you at the end. And that's where those surprises come from. That's why you can't predict, you can't bet on this candle. You have to bet what comes with this candle. Okay? So, but it's hard to do. You're in a market right now. Everybody wants to trade to start with. Everybody wants to just trade. We're a bunch of greedy bastards is what we are. And we just want to trade and make money. But there really is times where it's best just to sit quietly and let the story tell itself, following the candlestick, following that price action. And if the price action or the candlestick starts breaking trend, that's telling a story. If it stays above trend, that's telling a story. But it's hard it's hard. You know, take the NVIDIA, you know, NVIDIA, take NVIDIA, okay? Take the NVIDIA here. Look, Wall Street's darling. Look, everybody wants NVIDIA because, you know, hey, NVIDIA's got some potential upside. At least that's what everybody wants to think. You know, I don't know if it does. It sounds to me like it does, but, you know, I can't guarantee that. All I can do is follow the chart. That's all I can do. And, you know, by holding off so far, look where we're bouncing. And I'm not making this up. It's right there. And I'm not saying it's gonna bounce. Believe me, I'm not. I can't predict what's going to happen. I need to let this story play out today, and then we'll see how the story works out tomorrow. Because the story tomorrow will lead me down a path. There's 3 possible stories tomorrow. Story 1, maybe, you know, I'm going to be ridiculous here, okay? I mean, I think that's ridiculous. I don't think that's going to happen. But something bullish, story 1. Story 2 would be we just, you know, inside. We just bounce around inside, maybe, inside that candle, until the story finishes. Finishing would be either up or down. Okay? The third story is tomorrow we just do something like that. But the first part of the story, you have to be careful by jumping on this, long or short, because that will more than likely, well, it'll bite 50% of the people is what it'll do. You know, if 100 people, 50 went long, say right now, and 50 went short right now, 50% is going to have a problem. So to me, that's pretty poor odds. And anyway, I think that's pretty poor odds, to tell you the truth. So that's why I want to wait to see how that handles itself. And right now, it is still in trend. And to be fair, it is also, from a negative side, making a lower high at the moment. Lower high. We have a lower low based on this candle, we'll call that candle. But we're still running off that run right now, right through there. Okay. Anyway, any questions? I feel like I'm starting to repeat myself here. So, anyone has any charts you want to look at? I absolutely want to thank you all for being here. I really, really do appreciate it. Thanks for coming to Doug and John's, if you were here. If you weren't here for John and Doug's, you're just a dirty rat. No, I mean, nah. So if anyone has any charts here, thanks, Mike. Yeah, I'm not ready to quit here just yet. I'm not ready to quit. If anyone has anything you want to look at, we can certainly do that. I'm going to look at EAT. EAT might be a short for somebody. See how we're below the 50 period moving average. See how we've made a nice little top right there, and see how my trend has now broken. So that might be a nice little short coming in. I think I'm going to flag that one. Thank you. Hey, H-Man, how would you treat Walmart? Walmart similar to NVIDIA? No. Well, maybe. Yeah. Let's today's story play out. Yes, it's always going to be that. Let today's story play out. Now, you know, everyone's a little bit different, okay? Don't let... I think it was yesterday somebody asked me, or maybe it was this morning. It was, I don't know, either yesterday or this morning. You know, if you are concerned, if you are troubled by the market or by the way a chart is looking, the best thing in the world you can do is get out. Don't fight, and do not listen to what somebody else says. You have to be your own trader. You've got to make your own mind up. All right. Now, I think I'm currently. I better check before I say anything. No, I'm out. I'm out of my Walmart. I think I closed it. I don't know when I closed it, but I was in it. So, like I say, if you are concerned, it's best to be out. Now, I look at Walmart here, and we're still holding a position. We're still holding above trend. We're still holding above support. If today's candle closes like this, I would take the bet that we're going to see a lower low tomorrow. I'm going to actually move that down to there now that I think about it. So, but trend is still holding. So, it also depends your what I call your pucker factor. Okay, everybody's pucker factor is a little bit different. And a lot of that comes from the size of your account. Somebody with a 500K account, you have a much bigger pucker factor, wider pucker factor, than somebody with a $5,000 account. All right? With a $5,000 account, sometimes you got to be a little quicker to say, I'm out of here till the market becomes more on my side. Somebody with a $500,000 account, they can live through some pullbacks and bad moves and whatnot. So, but right now, that chart is still bullish to me. Still bullish. It could pull all the way back down to about 68.40 here, and I'm still going to be bullish on this chart because the trend is still up. And that's what I'm going to look at. Now, what you've got to be careful of is how far are we away from trend, all right? Now, with Walmart, I don't think we're very far percent-wise. We're what? 1.6, 1.5 to 1.7%. So in the big scheme of trading, we could have some serious follow-through, right? Is that really damaging? To some, yes. To some, yes. And you've got to make that that call in there. But me, I'm waiting for it to pull back, give me another entry, and I want to buy it back. So anyway, thanks. Sorry, that was way too long. But USO, is USO showing a low-risk entry? It's a low-risk entry because the stop area would be low. But, you've got to take in consideration, you've got this top right up here. So is it a low-risk entry? It is, but right now we've got to get through this resistance line before it becomes, really some good quality. And I'm not saying it's not a buy right here. In fact, this would fit just about everything for me, except I probably wouldn't want it till it got above 81.25. And if that's the case, I might as well wait till it gets over this red line. And what I'm looking at is right there. That's too much risk for me. Now, I'm probably, I can almost bet that I'm not the guy that's going to get the best entries. I'm not the best guy here for that. I don't chase the best entries because I've learned that it's not about, well, it can be. So you've got two ways to look at it. You can buy low and sell high, or you can buy high and sell higher. And you've got to decide which camp you're in. You can be in both camps, but make that decision based on the chart. So I look at this chart, and I think I'm going to have to be a buy high, sell higher kind of trader on this chart because I don't like that right there, that green line. I don't like being under that, and then we have this downtrend line. I love the trend, but you've got this argument right here, and I want to be away from that argument. So that's what I would look at. Okay, I hope that was helpful. Let's see. Mike there is looking at backs. Ooh, I like that kind of chart. Look at that. That's nice. So let's do this. Let's get rid of all that, and let's do this. So that's one of the first things that I see down there is a nice double bottom. And then, we pop up, we pull back. That's a perfect scenario for me. So let's do this, make this blue here. So here we pop up, and I love it, by the way, when a candlestick fails one of the moving averages I use, like the 50-period moving average. I love it when it fails it like that. And I love it when it finds it as support, because what that tells me is it's working. My plan is working. My plan meaning the usage of candlesticks and the usage of moving averages. Okay, I love it when I see that. So here's a total failure. Back down, and look at the T-line there. Total bounce off the T-line. I love it when that happens. So now here we are moving up. Now we're back up over those candles. We're over the 50-period moving average. That's a sweet looking chart. Where our trend here is not trending up. Price is above it though, so I'm going to go with that. I like that chart. I'm going to flag that chart. Thank you. So now the way I would set this up for targets is, number one, this is going to be the dotted deuce and the 200-period moving average. They're going to be automatic targets. So here's where I may put in the what are they? I don't know. Quadrant lines. So I'm going to do something like that right there. Now I could go all the way to the top. Okay. Sometimes I'll do that on a chart. More times than not, I won't. And it's just because I would rather make a reasonable good trade and not so aggressive, okay? So right now, this would be a target area for me, right through there. And then that would be a target. Of course, that 200 is going to be a target in there, and there's even a quadrant line in there. And then this is what I'll use for that next target. And that gets us right at the top of that candle. I mean, we can keep drawing lines in there if we want. That gets us into that gap in there. So I think that's a beautiful looking trade right there. Yeah, backs. I hope that made sense to everybody. Now I'm just going to use price action to get me an entry on it. I would buy it today, but the market is not exactly my friend today. And I would rather make the decision to not make a decision today, at least for right now. Now, getting into the close, that might be a little different, but beautiful chart. Hope that all made sense. So, thanks, Mike. Appreciate it. To me, it's not that. Okay, it's not damaging. So, see, the trade still looks good, right? H-Man, that Walmart. I still like Walmart. It's just having a pullback. I had to close it because it was in the smaller account, and I have to treat the smaller account a little bit different because it doesn't have a lot of money in it. So I don't have the luxury of just letting it ride. I just don't have that luxury. It's more about profit taking when I get the profits. Let's see, Keith, how does the linear line help show you? Let's see, how does the linear regression line help, and how do you have it set up? Oh, well, it's part of my trend. Let's see here. Like take USO, okay? See, it's part of my trend. I don't want to draw trend lines. I don't like to draw trend lines. I'm lazy, all right? And I would rather have it done for me in the chart. So the Trendicator is a terrific trend, and I've just added this relatively recently right in here. And what it is, it's I'm just using the 21 day. I mean, why did I pick 21 days? I don't know why. Pick something, there's nothing special about 21 days. Other than I want a trend longer than 4 days, longer than 5 days. I want, when I start looking at a chart, I want it to have a trend. I'm not interested in catching this move. I'm interested in moving up, and maybe here's a pullback right in here. It doesn't have to come back to trend, by the way. The T line is a trend line. So that could have been a trade up like that. Here in this case, we're moving all the way back to the bottom of my trend. So below, we would be out of trend. All right, so above there, we're still in trend. And the way I have it set up, I'm using 21 days, and I'm using the exponential 21 moving average here as the data source. So it just gives me a 21-day view of everything. For some people, that's too long. Shorten it up. I could see shortening it up a little bit. For some people, I could see lengthening it a little bit. I know there's one, I don't know if the person is here, and I know they're trying to set their chart up, and I think they're looking at a 6-day trend. I think that's too short. And on the same token, they have shared that they've had trouble trading. It's because 6 days is too short. You got to lengthen it. You got to quit thinking about buy low and sell high. Think about buying high and sell higher. An established trend will get you down the road. Trying to catch it low, oh, sure, you can get some of those big moves, if they work out and they're sweet and everything. But it's longevity in trading will come from trading a trend. Longevity, all right? I truly believe that. So, Keith, did you catch how I set that up? Just linear regression. I'm using 21. There's nothing magic about 21. And then the data source is the 21 exponential moving average. That's all it is. And then it just works. I like what it does. Okay. Thanks for asking, by the way. Exponential 21. Let's see, William. Let's take a look at GDX. William, can you ask your question on this one? Go ahead and ask your question. I'll come back to it if you ask it. I have a reason for that. All right, I really do. And I'll explain once you ask your question. In the meantime, what does WHR look like? I almost bought this one yesterday. It's one we talked about. I think it's on one of the pre-market videos. And I just didn't buy it. And now look at it popping up. Even in a bum market, it's working out pretty good. Working out really well, actually. Yeah, working out really well. Let's see. I want to wait for a pullback, but it seems to continue. Okay, then tough. All right. And what I mean by tough is you're just going to have to wait for a pullback. Now, there are some times where you just don't get to trade that particular chart. And that's just a fact. I will tell you this. I will guarantee you it will pull back. I 100% money back guarantee it will pull back. What I can't tell you is when. All right. And I cannot tell you where it's going to pull back to. But you're just going to have to be patient and let it pull back. All right. GLW. I've been following this one. I'm patiently waiting. Intel, INTC. I'm patiently waiting. Now I got my pullback, but I need buyers to step in. Okay. So sometimes you just have to patiently wait. Just be patient. And GDX will pull back. Absolutely. Money back guaranteed on it. All right. It will pull back. So you just have to wait. Pretty simple. really is. All right. I think I'm down to maybe a couple more questions if you have any, and then we'll call it a day here. Let's see, cars coming up here. Cars having a nice breakout. T2123 is finally giving us something bullish to look at. Now, I think it needs to be a few more days. Let's put it up here, 2123. There you go. It needs to give us a few more days, I think, to the upside But this has been, I mean, look how down in the dumps that thing has been. And it's finally coming out of the dumpster here. Qs right now are being punished, but not everything in the market is being punished. So you have to, take that a little bit with, what you're trading, and kind of consider, do you run out and chase right now, or do you just sit patiently and let the story tell you a little more information? And that's the camp I'm in right now. So anyway, we'll call that a day here. Thank you so much. Thanks for Doug and John, and thanks for watching the show, all three shows. Remember, check us out on our YouTube channels. That's very important. Check your email, for God's sakes. And then if you subscribe to all the YouTube channels, if you subscribe to one, you do not subscribe to all. They're all individual. They're separate. But you'll get the pre-market reports, and I think they can be so valuable to you. Those reports, and the videos are relatively short. They're not long. And it just, I don't know, might help you down the road here. So thank you, Ron. Thank you, Jim. Thank you, everybody, for your questions. Thank you for being here. For those hit run candlesticks, I'm going to grab something to drink, and then I'll be right back in the room, okay? Thanks a bunch. We'll see you all. Take care.